We are all exposed to cyber risk. I don't think we deny that. And I think for those of you, whether you are investors, whether you are insurers, whether you're thinking of starting up a company, I would strongly recommend you look at cyber risk. There was, according to Cambridge University, a $1.5 trillion loss in 2017, economic loss from cyber, yet only 15% of that was insured. So if you're looking for an area where there's some significant opportunities out there, then this is one of them. And actually today, it was reported from Monte Carlo, which if you're not familiar with it, is one of the major reinsurance conferences and discussions. Both Munich Re and SCOR had cyber risk as a key point of their keynotes. So we've got a tremendous panel. We've got representation from around the world, and we have representation from both startups and brokers. I'd like to invite my panel up on stage now, and then I'll introduce you when you are sitting down. Okay, we thought we'd keep the startups and the brokers separated, just in case there's any fisticuffs going on. So closest to me, Sid Gavirneni. Sid is the founder and CEO of Zeguro. Zeguro provide both what he calls a chief information security officer as a service inside your business, and also provide insurance on the back end. Sid was one of the startup bootcamp cohorts earlier this year. Next, we have Andrew Martin, CEO of Dynarisk, who you may have seen present earlier on. Andrew is helping people figure out what is happening from the outside in terms of their cyber exposure. Then we have Sarah Stevens, who is the cyber lead for JLT Re Specialty. Sarah was there right at the birth of cyber insurance before it was even called cyber insurance. So I think Sarah knows everything and also where all the skeletons are buried. So we're looking forward to hearing from her. And then last but not least, we've got Eelco Ouwerkerk from Aon, who has got, I think, 9 years experience in cyber, is also very knowledgeable about InsurTech, and actually was one of the authors of the InsurTech book. So a fantastic panel. We've got a few minutes now to hear what they think about cyber insurance. So Sarah, can you hear this? Sarah, so a question for you. Given this large economic loss from cyber insurance, and also we're hearing sort of figures like $20 billion of premium in 2025 for cyber. We're only about $4 billion today. So that seems like the insurance industry has failed to provide support for cyber losses. So what's going on, do you think?
Total failure. I'm obviously terrible at my job. I've been at it for way too long to be good at it. No, I think, so one of the problems is that a lot of clients first think, I've already got coverage. And sometimes they think that because we slightly shoot ourselves in the foot by giving little cyber add-ons to every other traditional insurance policy. So it's like, here, have a little cyber in your PI insurance, have a little cyber extended on your FM Global property policy. But it's largely kind of terrible, not very broad cyber coverage. So some clients think, well, I've got that, so it's fine, and it was free, or it was really cheap, so that's all I need. And then if you can get them past that, then they start to think, okay, well, you know, the standalone cyber market, it's not quite right for my needs. My special different risk can't possibly be covered because I don't take credit cards, and therefore I don't have any cyber risk. And that perception is definitely changing, but there is definitely a view that the products that are on offer are not quite customized enough or customizable enough for clients to really get what they need. And if you get past that, then they think, well, it's a brand new market, so cyber is brand new. They don't always realize that it's been around and paying claims for almost 20 years now. Now, I get that that's still sort of embryonic in the context of more traditional lines of insurance. But once you kind of get past that, then the final challenge is usually we've got to provide too much information. So the underwriting process is too difficult, and couldn't you automate it a little bit more? And I think that's a huge challenge to probably everyone in this room, is how can we use both outside in and inside out tools to help clients get there faster. But all that being said, I mean, the growth is massive. So you talk to any insurer or any broker, and they will tell you that they're growing, 50 to 100% per year in terms of their cyber insurance books. So we've seen losses like, NotPetya, which you reference is just upgraded by PCS to potentially a $3 billion total industry event. And I know of 3 or 4 of the companies on that list of major impact who bought insurance straight away afterward. So I think those kind of incidents do have an impact, but it's just not a widespread cover yet.
Okay, thanks. So just picking up that last comment about the non-Petya loss. So, okay, with your experience with Aon, I mean, that a $3 billion loss last year would have made that in catastrophe terms about the 6th largest loss. This year, I think it would make it the largest loss so far. It didn't seem to make much impact on insurance pricing in cyber insurance. So what's happening? We're getting a large loss. It's impacted insurers, but normally you'd expect to see a shift in the pricing. What are you seeing in the market?
Well, what you see is that contrary to the regular P&C market, the historical loss data, or in essence the historical data in itself, is not available regularly for cyber-related insurance products. So despite the fact that we have seen some very big losses resulting from cyber-related attacks or incidents, ransomware, non-Petya, WannaCry, still it is very difficult also for insurers to base their coverage, their wording and their pricing because they don't have sufficient historical data. And that is one of the premier problems why still, although what Sarah mentioned, rightfully mentioned, the market is huge, but still there isn't a catalyst or a thing going on which makes insurers making it more easy to provide coverage.
So Sid, I'll just come back to you in a minute, Sarah, but so Sid, just picking up on that, so it sounds like Eelco's saying the data's not very good to make the assessment. Sarah's saying people are a little bit nervous about buying cyber insurance. They don't think they need it. Yet you start up a company, you've got investors to spend or invest money with you. Sounds like you feel there is sufficient credible information out there to be able to go and assess risks.
Yes, there is. Now, if we look at one of the other reasons for the slow uptake of cyber insurance, it's also because of the level of distrust that still exists. So if you do a search for cyber insurance, one of the results on page 1 will be about lawsuits by companies against insurance companies, trying to make sure that their claims are being paid out. And that's because there's not enough data for them to be able to appropriately price it. And as a result, there are way too many sublimits or exclusions. So the data aspect is what we see as the key to making this industry as a whole work. And you really need to think of cyber insurance as the most connected form of insurance. And we talk about connected insurance and we think of it as telematics for vehicles, but cyber, that means connections. And the goal here is to get as much data from these real-time connections in all the time, continuously understanding the risk of the business. So our approach here has been to go to these businesses as their security company rather than an insurance company. So there's a difference in the level of trust that they put in us. That gives us the data, essentially the X-ray of the security posture of the business. And to be able to underwrite well, you need both sides of the equation, the security posture and the claims data. You can't just work with one side. Okay, and this is where you have to get both.
So Sarah, are you seeing enough information, do you think, coming through from insurance companies to go through to insurers, so when you're placing the risks, there is that trust element between the two parties and you can price it fairly?
I think it's hard to say if it's priced fairly or not yet, right? So I think you look at the profitability of cyber insurance, and it's relatively profitable for most insurers. I mean, they may have had a bad year here and there, but generally, I mean, I think the last Fitch report referenced loss ratios in the U.S. domestic markets somewhere between 40 and 60%. So, like, it's not a bad line to be in. But you might look at that and say, actually, that means it's totally overpriced. But I think there's just not enough historical data, as everyone has said, yet to know that. And I like Sid's point about that kind of two-way conversation where you're coming at it from a security angle. And to your question, are insureds getting anything back from insurers from a risk management perspective to kind of feed that virtuous cycle of improvement and data collection? And I think from most traditional insurers, the answer is no. It's the startups come MGAs where you get that great two-way feedback, and that is, to me, kind of the future.
Okay, good. So, Andrew, that kind of nice link into what you're doing. So we saw your demo earlier. It sounds like you've got a fantastic product for companies to deploy to sort of help their staff and manage cyber risk right at the front end. It's brilliant. So why aren't you working with everybody out there? Because it's such an obvious solution to a problem.
So I think number one, you're going to see a lot of announcements coming out in the next 6 months, which will hopefully tilt that to the other side of the conversation. But ultimately, it's marketing and education. So the part of the market that we go after is the 99.5% of businesses who are not large corporates. So the SMEs, the sole traders, the micro SMEs. And these people have no idea what their risks are, what cyber insurance is, and what do I do about it. So the first hurdle we get people to overcome is the education piece. And that's specifically why we do this data breach checking service, so that the broker or the small business owner can start on that journey, because that's something that affects virtually everybody. But then once you actually get on the inside of those companies, then that really opens up the view of your risk, or the view of the client's risk, and then you can actually get them to go do something about it. So really educating the clients, working with the brokers, or ideally digital brokers to distribute the products has far better engagement rates. We see engagement rates through traditional brokers, from face-to-face meetings of in the 1 to 9% type digits, but when you go through a digital journey, uptake is like 30 to 40%. So, getting into a digital journey, and in some cases cutting out the middleman, really results in much better results for the end client.
Great. Well, so Eelco, cutting out the middleman, I think you've taken a bridge to the future by wearing the InsurTech label. Do you think that the broker as an individual person in the discussion with the clients is going to go away, or do you think there's still a role for brokers alongside the digital journey to cyber risk insurance?
Yeah, the purpose of me being here is to cut myself out. So thank you, Andrew. Now, in general, I think that, and Sarah made a remark also about MGAs and SMEs. I think that the traditional global brokers, JLT, Aon, Marsh, Willis, are primarily focused on the Fortune 500 companies. And what these companies have, they have large departments of risk managers, IT specialists, finance managers, etc. Whereas the SME companies, where primarily the MGAs focus themselves on, don't have that knowledge. So they are much more attached to a provider that makes cyber risk simple. And I think it is something that what we see now is that with the entrance of MGAs, it is refreshing also for the global brokers, because you see a different viewpoint that perhaps we as an industry have neglected over the past time.
Thanks. So, Sarah, just pick up this theme around SMEs, and you mentioned it, Eelco's mentioned it. Actually, and also Munich Re mentioned it today, that they see more opportunity coming through from the SME business. But it does intuitively seem surprising, because you'd think a large company would have potential for much larger losses. I mean, BA last week had 300,000 people impacted by that. Where do you think the real potential is for insurers looking to cover cyber loss? I mean, is it with the SMEs, or is there still a lot more opportunity to help the large insurers with their protection?
I think you've got both, and I would say on the SME side, there's so much less penetration. So I would bet there's double the penetration in the kind of over 1 billion in turnover kind of size company than under. So there's lots more room for growth in the kind of small end, and of course there's more of them. And you have the ability, I think, to do a lot more, like your cost of providing that service. So you can do a lot more automation of the underwriting process. You can, look at somebody like a CFC who's been a relatively successful MGA in this small cyberspace. I think they say they write 10,000 insureds. And they essentially do it with very little underwriting information and kind of law of large numbers. So it's a very efficient way to provide that insurance. So I feel like there's a lot of opportunity there, and there will be some disintermediation, which is fine. I think that's a good thing potentially in that segment of the market to some degree, although you probably still need us for distribution to some extent. But on the larger end of the market, you have companies still who, on the much larger end, complex, especially tech firms who have kind of a combination of technology professional and cyber risk insured under one program. They are crying out for $5 billion of capacity when all they can get right now is maybe 700 million, maybe $1 billion if they're sort of lucky and really scraping the barrel. So there's so much more that can happen in terms of capacity in this space for large insureds. But there's also a problem of, there's still a perception that cyber risk and cyber insurance to be effective should kind of cover anything that goes wrong with a computer. And it's like, okay, I got tricked using a computer, that must be cyber, right? No, it's crime. The computer didn't work, that must be cyber. Well, sometimes it is, sometimes it's not. So there's so much opportunity still to broaden out the product offering and give large companies what they need, while at the same time allowing insurers to shift the silent cyber risk out of their traditional books and into a dedicated P&L that they can measure better.
Okay, I want to come back to that opportunity bit in a minute, but just a question on that $7 billion coverage. I'm surprised Eelco didn't rush out of the room and start placing risks. But I mean, just back to my challenge, because we're all being too nice to each other. If there's a need for a $7 billion coverage for an insurance policy, why isn't that being placed in the market, whether it's conventionally or whether it's through kind of some parametric cover or some other creative way? Isn't that what brokers are meant to be doing, of being clever at placing coverage for their clients?
That's a question for me, Matthew?
Yes.
Yeah.
Yes.
Well, I think that is indeed one of the problems we currently face, and that has also to do with the way we perceive cyber now, because also insurers still, and brokers also, see it as an IT risk and base their pricing and proposition on that, whereas in essence it is a balance sheet risk, because a cyber risk is primarily related to either business interruption or it can relate to a D&O claim. So the problem is that although clients and especially the technology companies want huge layers of limits on a cyber insurance proposal, the industry is just not ready yet to provide such a big amount of protection.
Okay. So an opportunity, still an opportunity for you to go and cover it. Sid, just want to come back to you on this automated insurance. So I get the idea of having your CISO in-house, but human nature being what it is, people still like to pick up a phone and actually at some point talk to somebody, and it could, even if it's a relatively small business, they want someone to pick up the phone and say, this BA attack's happened, how do I deal with it? So how do you balance that? I mean, yes, you can offer people some automated CISO, you can provide the insurance, but how do you help them when they actually want to pick up the phone and speak to somebody?
So in that aspect, what we have seen is they actually don't want to do that as much either. Now, especially this is talking about the SME space, so that's where we operate in. So if you look at the recent report by PwC, today about 22 or 25% of businesses want to do everything online, similar to what they do in their personal lives. And about 45% want to do that online in the future, next year. So the trend is changing where they want all of the answers, everything online. So there has to be a mix. Now at this stage, of course, there'll be people calling us, and we have to make sure that we have enough bandwidth to answer those calls. But at the same time, the advent of AI will help decrease the number of calls that we get, because everything will be on a platform, easily available, easy to understand, easy to read.
Okay, well, I think one of your client prospects, if they're not a client, should be Amex, because after the BA loss last week, I had actually booked a ticket, and I tried to contact Amex, and I had the choice of either on the phone, which wasn't a choice because I couldn't get through, and there's no email. So I ended up writing a letter and posting it, recorded delivery, to explain to them that actually I would like to cancel my card. But, so I think you need to make sure that they've
Twitter?
I could have used Twitter, but then I guess that would have been another option. But they didn't have a Twitter channel on their website, so I did it the old-fashioned way. Maybe that's just me. Sarah, you mentioned before about one of the challenges being sort of common data. So one issue is just not having the data, but also you've got Andrew out there, you've got Sid, you've got not hundreds, certainly tens of other cyber analytical companies. What do we need to improve to be able to sort of smooth and make more effective the analytics?
Yeah, I mean, so from one perspective, like, it's great that all of you guys want to become MGAs, because then there's direct access to insurance and security, and it's this nice little cycle. But soon also, you won't want to share any of that data with anybody but yourselves. And I think that's the biggest challenge, is that we've got all these great sources of data, right? There is no one magic box that makes a company secure. And so you've got like all the different magic boxes becoming MGAs, and then none of the magic boxes talk to each other, and then we're still at the point where everyone's saying in 5 years we don't have enough data. So I think that's a big challenge. There's a huge opportunity for somebody to start to aggregate all of that information into a common nomenclature so that we can kind of all use it. And by the way, like, whoever does that, you can sell it back to all of us, so go forth. And that is still going to be a big challenge.
And I think it has to happen on both sides, because the security space itself is extremely fragmented. And there's no sharing of data there either. And the claims data is always seen as gold, logged away in some box. So it needs to happen on both sides, that sharing and aggregation.
Spin-off product line.
But Andrew, I mean, in theory, yes, but particularly in this GDPR world, with what you're doing, you must be getting lots of good data from the people using your product, and more to come, I hear. Where do you sit in terms of your ability to actually retain that data, and even if you sanitize it and anonymize it, are you able to use that to create more analytics, or are you just limited by the terms of your agreement with your clients or GDPR to do that?
Well, so with when it comes to GDPR, if you anonymize the data, you can do a lot more with it. So there is data that we provide to insurance companies that's been anonymized. So they'll know the risk profile of this type of person or that type of company, but they won't know that it's that person. So as long as we proceed on that basis, then yes, we can provide that level of data. But what we find is, and sort of like I demoed earlier, we have different stages of data richness. So, we can do the 3-second security check, we can do the 2-minute security check, or you can give it to an entire organization and have 500 people interacting with our product. So having the data is great, but the more the end users interact with the platform, you can step up the level of data richness. So it's just about having the ability to get different strata of data and then anonymize that, and then potentially make it available to others.
Great. So I think what the three of you are saying is, if somebody can figure out how to get access to this data and create an independent source of information, that's a great business saying. Take note, you heard it here first. So I just want to come back to you, slightly different thread now, but you went through Startup Bootcamp, you're based in the US, you came to London. I'd just be interested, a couple of sort of points around why London, and how is that experience of coming here as starting up a business, and now here you are, sort of 9 months further on.
Well, I love the musicals, Broadway's. That's great, the West End. But it's been a very similar experience, I would say, because cyber insurance is still new in the customer's mind in both the countries, especially in the SME space that we are playing in. So through Startup Bootcamp, we did get to understand how insurance companies here are thinking, which actually is the exact same as in the US. So there's really no difference there. And as a business, we were hoping that GDPR would be a great catalyst for the demand in cyber security and cyber insurance. A little, but I don't think it was as good as it was hyped up to be.
Okay, still time for that one to happen.
Yes.
Sarah, Sid said something there that actually is different from what you said earlier on. So Sid, I think you said you don't see much difference between the US and UK or Europe in terms of perception of
In
cyber
the
risk.
SME space.
In the SME
specifically.
space.
Yeah.
That's, unless I'm twisting it to suit my question. So that's slightly
Maybe
different than
you
what
are.
you said earlier on in terms of the differences between the UK and Europe.
Yeah, well, I just think that cyber insurance has been much more widely purchased in the US since, basically since TJ Maxx, right? It was like TJ Maxx happened, lots of data breach disclosure laws, and then boom, cyber insurance is a thing. So it's been happening, I think, in a much more widespread way and being purchased and claims being paid since 2008, 2009. So you've had a lot more maturity of buyers in terms of understanding what they're buying, why they're buying it, how much of it do they want, and how can they specifically tweak it to meet their needs. There's also a different environment in terms of more traditional insurances. So I think the US markets are a lot further along, well, if you define it as further along, in putting cyber exclusions into non-cyber policies, which obviate the need for a dedicated cyber insurance policy in the US market. So the big difference here is that a lot of policies are silent. There's a lot more sort of woolly, yeah, you probably have coverage. So the need is a little bit less obvious. The class action litigation culture is not the same. Not every country even has a class action mechanism, so you don't have data breach class actions. And until GDPR, you haven't had the mandatory data breach reporting obligations, so there hasn't been that same kind of awareness. So a lot of the conversations that you've had here for the last 5 years have been much more about dependence on technology, the potential for business interruption as a result of a cyber incident. And so they're just sort of different conversations, although now it's all converging. So everybody on both sides of the pond is concerned both about data breach, regulatory, and also about the kind of non-physical damage, business interruption.
Great, so the Europeans are catching up.
Catching up, but they were ahead in certain ways. Is that diplomatic enough?
Okay, just Sarah mentioned briefly there silent cyber, but just for the purposes of those that aren't familiar, the differences between silent cyber and affirmative, could you just say a few words on that?
Well, I think, and also to add to the remark Sarah made between the US and the EU, I would like to add to that with respect to the EU, we are still in the beginning of cyber-related insurance and developments, and that's due to the fact that we as EU are only become interested in the cyber, so to say, due to the GDPR itself. So we are still exploring what cyber-related issues means, whether it is silent cyber or affirmative cyber, and we are still in the situation where we asked ourselves, well, we have a property damage insurance, we have a business interruption insurance, so there must be some cyber-related element in coverage. Most of the times the answer is no, and that's why we are still exploring these silent or affirmative situations. And to answer your question, Matthew, many people don't know if it is silent or affirmative. So I think there is well, so to say, an educational need for people, and also from a broker perspective, to better explain what cyber in itself means.
Great. Okay, so just looking forward, just be interested for each of you what you see as the new emerging risks coming out towards the end of this year or 2019. So Andrew, what are you seeing out there?
So a couple of things. Number one, and I don't know if the insurers are going to want to go near this, but theft of crypto. So there have been some big heists of cryptocurrencies from individuals, small businesses, the exchanges, etc. These are big losses. So crypto is the Wild West from a security perspective. So as as a currency that's very easy to steal, the attackers are going to go after that more and more. Data breach is obviously a big trend, and I think what's been great in some ways about the BA data breach is it's the first big one to come out post GDPR. So you're going to be hearing a lot about this stuff coming out from Europe, from here on out. I think that's really a watershed moment. Just today, there was a law firm saying we're gonna go after BA with a class action lawsuit. So I think these cases are just going to get more and more prevalent, and all types of cyber issues, instead of being swept under the carpet like they were before, they're all going to see the light of day.
Sarah?
I think ransomware is not going away necessarily, although it's probably becoming more straightforward to deal with, and you have more vendors that are ready and willing to resolve incidents and pay ransom for you. And I think one of the other things, on the kind of crypto theme, is crypto jacking. So the sort of, which is that kind of a business interruption risk, or is it something that just kind of causes lag time and degradation in your systems? To be seen, but that's definitely been an issue for a lot of our clients. And then another trend, I suppose, that we haven't really talked about is sort of insider activism. So if you think of that as like the post-Snowden effect of people in large companies, insiders who don't necessarily have any way to monetize information. So we're not talking about kind of selling off credit cards, but we're talking more about exposing really embarrassing information, making private emails public. I think that kind of thing, which, again, somebody uses a computer, so it's cyber, but that sort of thing has the potential either to cause large data breaches or just to knock off shareholder value.
Right. Okay.
Yeah, I see three trends emerging, and I can relate them to the BA case. One of them is confidentiality, and that's what Andrew mentioned with respect to GDPR. The other one I would call disruption. The fact that BA used data and coded elements in their website from third-party suppliers that were breached. And the third one, I would say, supplier risk. So basically the supply chain in result to property damage and business interruption that is affected. And these three elements I will foresee have a very big impact the next year.
Great. And Sid, left anything for you?
Yep, three things. I think there are three risks that we see will become quite important next year. One of them is the misplaced trust in blockchain. Blockchain has great applications, great uses. However, they have not really been tested. Security research has not come to the state where everyone knows what the risks are. There just is a short supply of security experts who can go test it out. Then the other is really the advent of connected and automated devices, whether it is Alexa, Google Assistant. It's easy to start listening or recording videos, but they can become footholds to get into networks of whether it's businesses or homes. And the third one is autonomous vehicles, where we still don't know what the impact or the risk will be. There's an article yesterday on how someone was able to hack into the Tesla SS key and still steal it in a few seconds. So it's as easy as that.
Okay, so again, no shortage of opportunities out there to provide insurance. So just to wrap us up, just from each of the panel, I'd just be interested in 1 minute or less, for all those people out there that are thinking of starting up a cyber company or some related company, what would be your recommendation area that is still ripe for development? So, okay, do you want any favorites for you you'd like to recommend to the audience?
Yeah, I would like to steal a remark that I heard during an InsurTech conference also about this subject. And one of the persons told me that a couple of years ago, when related to cyber analytics, we started with only a reactive response. We only reacted when the event already took place. Currently, we're in a situation where we can predict. And I would say that the winner in this aspect would be the party or the person who can really automate in this sense. So that would be my answer to your question.
Okay, Sarah.
I would say focus your solution on enabling more collaboration between all the different stakeholders in the mix. Don't focus on how can I get the most data and then keep it in my own pot and monetize it. I think there's a much bigger opportunity to be realized from being that connector and becoming that kind of central point in this whole ecosystem.
Andrew.
I would say it's definitely an opportunity around data and setting up some sort of collaboration portal to your point, but not just focusing on the same old pieces of data that a lot of cybersecurity companies get. You know, what compromised devices are out there, what domains are hosting phishing emails. There's some different data sets, you know, combining it with business data sets or, you know, the geolocation stuff and that kind of thing. So thinking outside the box instead of just aggregating a bunch of security indicators, group those security indicators with non-security indicators.
Okay. Sid.
Everything that they said, because that's what we do. But I think the other aspect here that we did not really touch or talk about is any impact on the regulatory environment, where we have all of these cyber insurance products, which are still very static. And businesses, cyber security changes every single day, every single moment. And it's the ability to provide these businesses with these new innovative products on the cyber insurance space. So someone who can figure out how to influence regulation to come out with new products within a few days, that would be amazing.
Right. Okay. Well, thank you very much to my panel. Hopefully for the audience, it's given everybody in at least one way or more some things to think about in terms of opportunities and things to look out for from cyber. I'm sure we'll be hearing a lot more in this space and a lot more from our panel. But just please join me in thanking Sid, Andrew, Sarah, and Eelco.